Thursday, April 13th, 2017. Monaco 64, home of alternative economics and contrarian views. So I'd like to do an early market update, and I'd also like to talk about inflation and how it's a monetary phenomenon and not rising prices. It's frustrating because in our present day world, we have so many technological advances, so much scientific method. You know, we've got the internet, we've got, stuff that, 150 years ago, people wouldn't dream even of having, technological advance. But when it comes to the money people hold, the money people use, it seems like we're back in the Middle Ages. Anyway, let's start with the first with the markets. It's 8:30 a.m. London, so 3:30 a.m. New York time or Eastern Daylight Time. So it's still very early. Markets have been trading in Europe for over an hour and a half. As I've said before, in London the desks, trading desks start. A lot of them start at 7 a.m. because that's 8 a.m. on the continent. So the markets have been trading for a while. Yesterday, of course, was a very good day for the precious metals. We've broken through this important trend line that we've had since the all-time high in 2011, the high in 2012. We broke through it last year during the summer, but we weren't able to stay above it. And now we're definitely above it as we're trading at 1285 in gold, 1,285. The high this morning has been 1,288, and that trend line is coming in around 1275, I would say. So it would be very interesting to see what happens later on in the day if the U.S. markets come in and they try to take it below that line. Today, of course, is the last trading day of the week, as tomorrow is Good Friday, and markets will be shut everywhere except in all Christian countries, so to speak. What else? Silver. Silver's doing well this morning. I know silver has lagged gold in the last week or so, and previous to that silver was actually outperforming. I've made videos about it. I've made videos as well about the technical picture. You can look at those in the last week or so. I'm not going to use charts here. This is more of a quick update. I want to talk about other things. But silver this morning is breaking through the 1850 level. And I'm talking about spot prices here, of course. We are at 1852 right now, only up 3 cents, but above that level. We've gotten to a high of 1858, and the low has been 1844. So still very early days, of course. We got the main session COMEX coming in. We've got the U.S. markets opening later on. Anything could happen, but it's looking fairly good right now for precious metals. The dollar yesterday took a bit of a hit. President Trump said that the dollar is too strong. But I'm not sure it's because of Trump, what Trump says, that the dollar moves. But, people, as I've said before, have to give a reason for market moves, even though markets just move because they do. So this morning, the dollar is pretty much unchanged. It's just a little weaker against the sterling. We're at 125.60, up, almost 0.2%. Dollar yen is fairly steady, 109.06. So we're still below that 110 level. The low has been 108.71. Still think people should keep an eye on that cross rate dollar yen. As I said before, it's an important carry trade currency, the Japanese yen. Inflation. Well, here in the UK, on the radio this morning, LBC, which is the most popular talk radio in the UK, London, Leading Britain's Conversation, it stands for, LBC. They're talking about how energy companies are raising, their prices, and how the government now is looking to crack down on energy ripoffs. So I read an article here from the Daily Mail. It says, Prime Minister's crack down on energy ripoffs. Theresa May is set to announce a cap on soaring bills as EDF imposes second price hike in just 4 months. EDF is a French electricity company, quite big here in the UK. And it says the French energy company raised cost of electricity by 8.4% in March. It will now push through a second increase of 9% in energy costs in June. So, and here comes the government saying they're going to help consumers and calling energy companies ripoffs. And they're also blaming Brexit for this. And I made videos before Brexit. You can, search for them, Brexit, inflation, Brexit scapegoat. You find loads of videos I made about this. I said it like, a year ago or so, or maybe a little less, that they're going to use Brexit as an excuse to basically debase our currency. Because who runs the currency in the country, a national currency? Well, it's the government and the central bank. Central banks are not independent. I'm sorry. They work together with the governments. That's why they've kept rates at zero for the last 10 years, because governments are the biggest borrowers. And if rates were left to the market's device, governments wouldn't be able to borrow. They would be having to, do something drastic, and people would get really angry, the people who depend on government and government largesse, the public sector, the people who are on welfare. So, yeah, the Bank of England and the government are in it together. They've more than doubled the national debt since the financial crisis of 2008. I think we're about 1.6 trillion pounds in national debt. The government is running huge deficits, budget deficits, which is not the debt. The budget deficit every year is added on to the national debt. So we were told in 2010, when the new government coalition came in, conservative, liberal Democrats, that by 2015, the budget would be balanced. But right now, I don't even think they have. They're saying now 2020, the budget deficit will be, eliminated. But why is the budget deficit so important? Well, because it means that the government is spending beyond its means and borrowing, beyond its means. The only reason why it can keep borrowing is because the Bank of England is basically rigging interest rates and allowing the government to borrow, at zero cost and continue. And what happens when the government borrows zero cost? Well, in the fiat money system, as you know, debt is money. So the more debt the government creates, more deficits, the more money there is in the system, and real goods and assets aren't able to keep up with the government because it's difficult to create real things. But governments and central banks, they're like the old alchemists from the Middle Ages. They think they can create wealth out of thin air and that it's going to improve everything. All it does is debase the currency. Back in 2007, just before the financial crisis started, £1 bought $2.11. Now, as I speak, about 10 years later, £1 buys $1.25. As the dollar is still the reserve currency of the world, and the majority, if not the bulk of, 99% of real assets, commodities are still priced in dollars, that means that we can't buy as much with the British pound or the Bank of England note. So that's why prices aren't going up. It's the pound that's going down. So here we have, the government blaming energy companies for ripping the public off, while they're the ones who, it's the government and the Bank of England who are, and the banking system who are ripping the public off because they're rigging interest rates, they are making money plentiful, and they are debasing the British pound. And all it means, the other side of the coin of the debasement, if the currency is worth less, everything that's denominated in that currency is going to be worth more. And that's why prices are going up. Of course, maybe, these companies are a bit greedy, but in the end of the day, if they don't make a profit, they can't, there's no reason to be in business, and then you won't get any electricity. So I just think it's frustrating. You listen to the radio and people still think, oh, they're raising prices, they're a rip-off. But, they don't shine the spotlight on the culprits, which is the government and the central bank. As Felix Sommeray, a famous banker and economist in the early 1900s said, only governments and central banks can create inflation. Of course, there are cases where, the market creates inflation, like during the gold rush in California in the 1849, 1850. They found so much gold in that region that local prices for everything went up because there's so much money being created. But that was only temporary. In the fiat money system, it's government and central banks, and the UK government's policy has been a policy, the more you borrow, the more you want that currency that you borrow in to be worth less. And they use Brexit and greedy rip-off companies as a scapegoat. So yeah, wake up, people. It's the government and the central bank that is debasing our currency. It's going to get worse. It's taken a little while since Brexit on June 23rd for this to come through. And I told people it would take 3 to 6 months because a lot of these companies have long-term contracts at fixed prices. But once those contracts end, they have to adjust to the new prices. And as the pound's going down, it gets worse. So they have to raise their prices so in order to stay profitable. So yeah, as I leave here, gold still 1285, silver 1852, stock market Dow down 25 points, S&P down 2.76. So not much happening there either. 20,500 seems to be a key support now for the Dow. And of course, 20,000 is a key level. So if you enjoyed this video, give me a thumbs up, share it far and wide. If you haven't subscribed to my channel yet, please do. And I'd like to thank all the people who've been donating to my channel. And yeah, there's some links below in the description if you like to donate to the channel. I accept Bitcoin, PayPal, Patreon, BitGold. So I'll speak to you later. Bye.